Hi, Carlos. Nice to have you here. How are you today?
Doing well, Michelle. Nice being here too. Also, I mean, happy to have this conversation with you.
Nice. It's a pleasure to have you here. So, first of all, would you like to give us an introduction of yourself, of course, and of Aqua?
Absolutely, absolutely. So, a little bit about myself. Carlos Marín, CEO of Akua. I've been working in payments during pretty much my entire career. 36 years old. I started working 15 years back in one of the first payment facilitators that actually existed in Latin America, a company called Dinero Mail. And then
Mhm.
from that day on, basically, I start developing my career between payments. Then I have also a brief period of time at Mastercard of 5 years, not brief at all. Um, Also work at Pomelo, one of the earliest employees of the Andean region. I was the guy responsible to actually launch Pomelo's operations in Colombia, Peru, and the Indian markets. And then recently, basically, with my other two partners, we decided to jump out of the boat and create Aqua. Um, Pretty much what we are doing in Aqua is we are building payments infrastructure on the acquiring side of the business. Basically, all the technology that you as a merchant requires in order to process more efficiently payments. Our
Mhm.
thesis is pretty much connected on the lack of innovation and the lack of new rails, if you will, in that piece. Just for you to have a context, in Latin America particularly, but this is also that in some countries affects globally. The payment rails for where mostly the cards transactions, runs today are actually rails that were built 30 years back and
Mm.
are actually the same rails that we are still using today, even though
Wow.
those rails were created without the existence of internet, right? So
Yeah.
that's funny stuff. Um, and so what we are doing is basically the infrastructure, the technology that are looking to basically replace those rails and bringing into the new era, right? The new technologies capacity.
Mhm.
So cloud native, API driven, and also by using our infrastructure, hopefully you can have regional slash global reach by using one single API, right? That's a little bit of what we
Mm.
are doing.
So you're basically building the infrastructure that will let basically merchants all over Latin America to actually accept payments and manage payments, basically.
Exactly. So our focus is actually to enable any payment rail, right? So
Mhm.
I was just mentioning cards, but at the end of the day, this same infrastructure, the same trails, just because the way that the rails were developed in Latin America were kind of fragmented. So you have, for example, if
Mhm.
you were a merchant, regional merchant that wants to operate in Colombia, and you want to accept cards, but also you want to accept accounts, right? Let's say, or real-time payments, then you have to integrate with a acquire, local acquire in Colombia to accept cards and also local acquire to accept RTP. And doing the same thing, several times depending on the amount of countries that you are willing to enable.
Mm. So
Um,
that's a single
and
integration per country, basically. You can have you can't have it all in one place until now, of course.
exactly. So the complexity is quite difficult to manage for these
Mm.
guys. And that's actually how if you see a little bit of the new businesses that have come in payments, that's actually where the orchestrators started to have, especially on e-commerce, uh, start to grow quite a lot in the sense that they
Mhm.
start to absorb that complexity for big merchants, global or regional. But at the end of the day, these orchestrators, for example, they are, I mean, mandated to actually connect it
Mhm.
to local payment methods or to local rails. So it is not necessarily that they are actually upgrading the rails. They are just
Mhm.
basically
Using them.
resting exactly complexity to the merchant. But at the end of the day, the rails are still there. So
Mm.
the dependency of those rails in terms of, for example, availability, right? Downtimes, also lack of innovation. So for these kind of companies that provide those rails, it's quite difficult to create, value-added services or move faster, basically to enable any kind of feature or functionality that improves, let's say, fraud or approval rates, right?
Mm. No, that's pretty interesting. So basically, there is an old and updated infrastructure that need to be maintained and need to need a lot of work to be working at least, that you are
Mhm.
trying to innovate in a certain way. And that's very, very interesting. So the first things that comes to my mind is that more widely about the market. So the Latin America fintech market at the moment is, is booming, is growing like crazy. There's a lot of competition, and there's a lot of new players, and you are, of course, one of them. So my first question would be how it is, under your point of view and through your eyes, let's say, uh, how it is the fintech market right now in that part of the world. So which are the main challenges that they are seeing, and the main opportunities, of course.
Absolutely. Well, great question. I think it's from our perspective, there's a ton of opportunity in when it comes to infrastructure, not only in payments, but in
Mm,
general. When it comes to technology, there's a ton of necessity for any industry that today are looking to actually bring their business into the digital era. So we are kind of moving forward in that piece. That's why probably you are seeing most of the most
mm,
relevant companies or fintechs or startups in Latin America you are seeing are mostly on B2B, and particularly they are, in the last 1 or 2 years, more focused on infrastructure, right? And again, not only talking about payments, but in general, right? Healthcare, you name
mhm,
it, or even marketplaces as a service, or this kind of verticalized software companies that are actually trying to like solve specific difficulties on the merchant side. Let's say restaurants, just to mention
mhm,
one of the verticals. Um, so that's a little bit of our view, and that's actually one of the huge necessities that we start to show with our investors, right? How we can be, the company that is actually bringing, value to the entire acceptance ecosystem, if you will, using good technology. So infrastructure is first, and then the second one, I think not necessarily again talking about payments, but credit. It's a huge, huge, huge opportunity in Latin America in general.
mm,
So when you see credit, at the end of the day, there's markets that actually have a low penetration of credit when you compare it, with, I don't know, for example, Brazil or even in Europe or the US. And so even though you always hear in Latin America, in some countries, some presidents say, hey, you know what, we are quite advanced in financial inclusion just because there's 80% of the people having a financial product. The reality is that the penetration of credit is quite low. In Colombia, for example, it's nearly to the 25% of the potential,
yeah,
in credit approval, if you will. So
mhm,
there's a ton of opportunity also in there on the fintech side, and we are seeing great companies also trying to like solve issues related with credit in terms of data when it comes to also to
mhm,
open finance. So if you see Latin America also, it's a start to move to regulations connected with open finance, and how all the data of the consumers, financial consumers, are actually shared between entities, so you can improve also the way that the people is actually receiving credits.
mhm,
Yeah, I would say that there's in Latin America, there's always a ton of opportunity. We are still, quite behind in some aspects when you compare it with Europe
mhm,
or the US, or even in Southeast Asia with a couple of countries. Uh, and from my point of view, it's infrastructure, it's credit, and then there's in between there's a ton of other opportunities when you start to work with B2B particularly.
yeah. Oh, but the one about credit is a very good point, to be honest. And I saw it happening also in other parts of the world. Like, for example, there's a huge problem about it in the MENA region, because there's not enough data to actually validate, for example, a new loan or a mortgage. So maybe a question here would be, okay, what's the problem actually there? So institutions do not have enough data to actually validate if a customer or a corporate is, worthy enough to have a loan, or there's a problem of liquidity on the other side. So what's the catch there?
Great question. So I would say that it will depend of the country. So let me talk about a little bit about Colombia, and then we can compare it with other markets. But I mean, in general, it's kind of the same thing. So the first one is definitely lack of information. So
Mm,
today, I mean, most of the financial institutions, banks, that has been providing financial services to the markets in Latin America, they have been putting their focus always in the same segment of clients. So for example, I mean, in Colombia, you have let's say something close to 20 financial institutions with
Mm.
license, 2025 or so. And the reality is that 80% of those financial institutions has been basically providing services to the same amount of clients. Let's say the same 5 million clients that, in the case of Colombia, are the ones that are visible to the ecosystem, and the ones that that have enough data to like measure the risk, right? And so there's not like much appetite, for these guys to actually extend the reach
Yeah.
and bring credit to the baseline. But the main reason why that's happening is because there's a ton of lack of information. So there's not communication between those financial institutions in order for them to like know that, for example, Michelle has a saving account with X bank, and then he's also
Hmm.
having a credit with Y bank, you name it, right? So that's first. And the second one is that there's also a ton of usage in cash, right? And so
Mm.
um, for example, in Colombia, depending of the fund, you will see that we are using between 80% to 70% cash, right? Um,
Hmm.
and so that's also creating a huge difficulty for financial institutions to actually, know you a little bit more better in the usage of your funding, right? On how you operate. Um, but then you have markets like Argentina, for example, that it's transitioning today, into a more, let's say, with a market with much hope than a couple of years back. But in Argentina, the most difficult was that credit it doesn't exist formally to the consumers because the inflation doesn't allow you to actually to the
Oh yeah.
financial institutions to actually lend money, right? Because just the inflation is that high that it doesn't make sense for you to have a credit just because the credit probably will evaluate you
It's maybe
the
of the
amount of the
time
money.
frame, you know? Yeah, because between
Exactly,
the time that you actually get the credit and when you have to repay it back, the inflation is going so fast that, the interest rate would kill you.
exactly. So you have different reasons, but at the end of the day, if you ask me, probably the main two reasons why credit is still an opportunity in Latin America is because data, and so that's why most of the markets in Latin America. This started in Brazil, but also, as it happened in Latin America, first occurs in
Mm.
Brazil, the innovation occurs in Brazil, and then expand to the Spanish-speaking countries. That's why most of the regulators in the Spanish-speaking countries they are pushing forward regulations in terms of open finance and open banking, just because they know that once the financial institutions and the data of the consumers are actually, public, let's say,
Hmm.
and the consumer takes control of the ownership, saying, hey, you know what, I want my data to be shared not only with you, bank X, but also with bank Y and whatever, then the competition increases, and then also the banks start to like look much business in other segments. um, and then, I mean, one last comment there. This is not happening in every single market in Latin America, but this is funny. In some countries, we have what we call these caps on the interest rate. So, for example, in
Hmm.
Colombia, we have a cap in where the financial institutions they only can lend money up to that interest rate, and so that also have been creating, some discussions internally for example, in Colombia, but also in other markets, in where the banks are not able to actually lend money to a different segment, probably with more risk, just because they don't overpass that cap, and so they
Mm.
cannot mitigate the risk with interest, right? So yeah, good discussions happening there to see if it makes sense to like just eliminate that cap or
Eliminate the
even
cap.
increase it.
Yeah.
Exactly.
Yeah, don't you think that it could be a little bit risky to eliminate the cap? Because we obviously have similar things in Europe. For example, also in Italy, there is a specific cap in terms of interest rate that you cannot ask, for example, to a retail customer. But that is done in a way that is actually protecting the final customer so that you do not have an interest rate that is able, to financially destroy a person. So
Yeah.
maybe from a retail perspective, it makes sense. From a corporate perspective, maybe it's inside the concept of risk. When
Mhm.
you are running a company, you are always using risk capital, so you're basically taking a risk on yourself. So it's actually implied in the actual activity that you're doing. So do you think that maybe there is a need of distinction between the two? And maybe also, what's your opinion? You should eliminate that? You think that it's right to eliminate that?
Great question. I mean, when it comes to my opinion, I guess it's I mean, I'm definitely open to be more flexible in terms of the cap. I mean, I guess when you don't have cap, then you basically are forcing the market to regulate, internally.
Yourself, yeah.
And so it creates more competition. But on the other hand, of course, when you have markets in where the cap has been existing for years, the political cost of just saying, let's eliminate that is huge, right? Because
It's very high, yeah.
people have in our minds that the cap exists to protect us, right, against the bad guys, the banks, right?
Yeah.
But the reality is that the effect is all the opposite at the end of the day, because just because the cap exists, then the banks are not capable to like deploy their business, their lending initiatives to these guys or to this segment of people. And then what happens in our markets, being, or all this cash driving moved and is that appears all the kind of lending initiatives in where basically they are taking advantage, offering you illegal credit, if you will,
Mm-hmm.
at a huge rates.
Interest
So,
rate,
I
yeah.
mean, the necessity is there. I mean, and the credit will, I mean, the people will still need the credit, right? And so they will get it, whether if it's from a bank or from any like illegal lender, if you will.
Mm-hmm.
So that I'm more open to that piece of, let's say, let's let the market, to regulate each other.
Mm-hmm.
In a similar way with when it happens with B2B, right? So if you are a small lender, let's say a company that wants to like deploy your business in some of these markets that have this cap, then you have to struggle with two major things. The first one is you have to compete with the banks, and the banks have
Mm-hmm.
the possibility to raise funds from the public, and then you have to. I mean, the cost of funding for these guys are quite higher than a bank, definitely, or a financial institution. And then you have the other difficulty, which is, you have this cap in where if you are targeting, a segment of financial inclusion, let's say, right, your that cap basically is not enough to basically surpass your risk, right?
Yeah.
So yeah,
Yeah, no,
interesting
that's a very
conversation.
interesting point. Yeah, absolutely, yes. I was thinking more on the regulatory part. So you were mentioning of course, the open finance and open banking market. I'm wondering what's the status of the open banking situation in Latin America? Because for example, in Europe we have PSD2, there's PSD3 coming, and there's a world regulation that apply to every one of those 27 countries at the moment. Uh,
Mhm.
but I think that there's something like that is missing at the moment in Latin America. So every country
Yes.
actually implemented their own rule, maybe inspired or led by Brazil, as you said. But how they are trying to overcome this kind of problems? So they are working with each other in any way, or there's a plan to do that, or something like that.
That's a great question. Well, from my personal view, it's like I said. You may think that we are working as a region together just because we are following most of what is happening in Brazil when it comes
Mm,
to payments and open finance. Um, and then we are also, I mean, trying to like get the best of Europe, right? With PSD2 and PSD3, and you just mentioned. I guess
mhm,
the main difficulty today, but also opportunity, is that on exception of Brazil, which probably all
mm,
these rules have been already like quite defined by the Central Bank of Brazil, the rest of the markets are actually implementing open finance regulations and open finance like landscape, if you will, locally.
mhm,
In Colombia, for example, we are expecting to have this implemented by next year, starting
mm,
with our real-time payments infrastructure uh, system from the Central Bank of Colombia. We didn't have that, and the Central Bank of Colombia is actually building that, right?
mhm,
Um, and so I guess from my perspective, it's at least from the Spanish-speaking countries, we are transitioning and building those landscapes in terms of regulation, just to like let the field pretty much like the same for everyone. Uh, but still probably missing probably 2 or 3 years for us to like actually like start to see the value as we are doing it and seeing it in Europe or even in Brazil. But again, I guess that opens the door for opportunities. In Akua, for example, we are seeing that. So we decided to start in this strategy of any payment rail, enable any payment rail
mm,
on the acceptance side of the business of the payments ecosystem. It started with Visa and Mastercard, but we have in our mind also to be an enabler for real-time payments. And so real-time payments is pretty much in terms of, being really tactical. It's how we can be an enabler of real-time data of how the consumers, are interacting each other between merchants and payers, right?
And consumer, yeah.
And how we can put the technology, on service of any kind of company that actually can consume that data, take it, and with that, increase or improve their score analysis for giving credit, as an example, right? And doing it with good technology, doing it faster, doing it with, with the right controls and security, of course, but connecting not only cards, but also, any other payment rail in where any company can like take advantage of consuming that data, of course, in compliance with the local regulations and the local landscape, right?
Mm-hmm. No, that's really interesting. I think that you as a, let's say, as a country or as a continent, are following more or less the path of Europe there. So in Europe, for example, that kind of regulation was created by the UK, and everyone
Mhm.
tried, to adopt the same kind of rules or set of rules, and they're trying to go more or less in that direction. I think that something very, very similar is happening there. Like Brazil is leading the way, and you're trying to, let's say, follow the lead in different ways and different direction. But I think that
Absolutely.
is a very common model, when someone finds a good setup of rules, and everyone is trying to implement that.
It is.
Maybe one question that I had in mind was, we all know the kind of environment that Brazil is right now for startups, and more or less for also for the fintech market. With a good example like Nubank and other startups. So, what do you think was, from a founder's perspective, what do you think was the right regulation that they implemented, or maybe the right mindset ecosystem that try to grew up in order to have that kind of innovation all in place, that kind of leadership or advantage over the market? Because there's something very, very similar going on in Europe with the UK. The US are way ahead in that competition, so you see that there are certain kind of ecosystems that are going at a different speed.
Yeah, absolutely, absolutely. I mean, it's I'll try to explain you also really fast, but great
Hmm.
question, by the way. It's you know something close to 10 to 15 years back.
Hmm.
Brazil was actually in Latin America the first market that decided, in terms of regulation, to implement what we call in payments, especially particularly speaking about cards, what we call the four-party model, to implement 100% four-party model. And the reason why I'm saying this is because that was actually the first, from my perspective, in terms of payments, was the first action that actually allows Brazil to increase, the electronic payments acceptance. And by doing that, the regulator, quite early start to like understand that payments is actually the first, in terms of infrastructure, is actually the first thing that you need to tackle
Hmm.
in order to like bring data and bring, financial inclusion into the conversation, right? Um, by doing that, just to give you some numbers on that, Brazil, prior to that change, had only two acquirers in the market. Basically, the acquirers are actually
Wow.
the ones that, probably this, the ones that
Yeah.
actually onboard the merchants to accept payments, right? Electronic
Hmm.
payments. Brazil had two acquirers. And then after the regulation, today, probably, I think Brazil have over 25 acquirers in the market, right? And it happened the same thing on the issuing side. Basically, the entities that actually, offer cards to the
Hmm.
people. That's why, due to that change of regulation, it's actually why companies such as Nubank or C6 or Banco Inter, which are neobanks, right, have the possibility to bring to bring, and build the value proposition quite easily. Prior
Hmm.
to that, Brazil had quite a protective regulation to the incumbents. And so for any kind of neobank, it was almost impossible to deploy their business there, right?
Hmm.
But the funny thing is that action that Brazil took, as I was mentioned, 10 to 15 years back, it was actually that the rest of the Spanish-speaking countries started to work probably 6 years back. So, for example, in Colombia, that change of regulation, the same thing that Brazil did to implement this four-party model, occurs like 5 or 6 years back with a decree, right? In where basically the regulation, hey, you know what? We are implementing the four-party model. We are open the market to new competitors and so on and so forth. So I guess my point is Brazil is in an advantage today. Probably if you see Brazil compared with any of our markets, depending on where you are. I mean, if you're comparing with Mexico, probably Brazil is probably 5 or 6 years ahead. If you compare it with Colombia, also 4 or 5 years ahead. It's because they decided to make this change quite faster than other markets in the region. And then by doing that, the regulator, this is a personal view, not necessarily something that I confirm, but by doing that, the regulator get all the knowledge about how the payments ecosystem works and how strong is the data behind payments to to potentialize financial inclusion. And then they decided to actually move faster and create their own payments rails, right? And that's how Pix born. And so they basically say, hey, you know what? Now that I understand that the payments is the baseline and it's creating a huge opportunity for competition, then we are creating our own payments ecosystem on real-time payments, of course, bringing all this expertise from India and the other markets that were quite developing that piece. Yeah. And created Pix. And the funny thing is, you mentioned that Brazil is also we as a Latin American countries, we are seeing Brazil definitely. Brazil is actually Pix is actually they are selling Pix to other markets in terms of infrastructure, for example. So in Colombia, the Central Bank of Colombia were exploring who will be the provider of the infrastructure for the Colombian Pix. Let's say we call it Breve here. And the solution of Pix were on the table, right? So at that point, even they are selling their own technology.
Yeah, I'm trying to investigate the topic a lot, to be honest, recently, and what they did with Pix was kind of amazing. Very, very close to what India did with UPI, for example. And I think that they're trying to export it not only in Latin America but also abroad, overseas, and everything else. So, but I think that your explanation makes a lot of sense. To be honest, they acquired first the kind of knowledge that they needed in order to expand, and now they're using that, to have an advantage. So this is absolutely true. I know it was a very smart move from them. So maybe let's say talking a little bit more about your founder's experience. I know that you recently closed a funding round. So the first question that comes in my mind is how hard it was in the current environment to close a round, because it's not easy nowadays to actually get money. And how do you see the whole, let's say, founders ecosystem, startup ecosystem right now? So, 2 or 3, 5 years ago, everything was easier, given the kind of liquidity that was present in the market, the interest rates, and everything else. Right now, everything is harder, both for founders and VCs. So, how hard it was, and how was the experience overall?
Excellent question. So, I mean, let me start with a fact, and it is that none of the three of us, I mean, on the exception of Juanjo, which had their own startup like a couple of years back, bootstrapped. None of us had actually prior experience doing fundraising. So when you ask me, probably I don't have like a prior experience to compare how hard it was. Of course, we were kind of, I wouldn't say worried, but one of the things that we knew that it would be difficult for us in this fundraising, or it might be difficult, it was the entire process of get connected with the VCs and actually get the funding coming. I'll be completely transparent with you. It wasn't easy, but I guess just because the profile of the three of us as founders, I have, one of my partners is Brazilian, Rodrigo. He's based in Sao Paulo with a ton of experience in payments. Work at Mastercard for almost 10 years. Work at Movi, one of the biggest neobanks, let's say, in Colombia for also a couple of years, and work at Jeeps also for almost for the last 3 or 4 years. And then you see my other partner, which is Juanjo. He's Uruguayan, based in Montevideo. Juanjo worked at Pomelo. He also worked at the local building their infrastructure. PayU, one of the biggest names on the startup ecosystem in Latin America. and myself, right? So I guess the funds saw the opportunity of saying, hey, you know what? If these guys with this seniority,
Get
putting the three
together.
of them together exactly,
Yeah.
and they're tackling an opportunity, even though probably most of our funds, actually, we have to explain what we're trying to do because the business of infrastructure is that low that not necessarily is evident, right? That the opportunity is there. And so if these guys are actually, getting together and moving forward to tackle this opportunity, then something's there. And that's help us a lot to like move forward with the fundraising. We ended up with, after a ton of meetings, I have probably like sat down with probably more than 80 funds during almost 3 months. We ended up with an oversubscribed round. Four times we were trying to raise. So basically, we ended up raising 4.3 million. So we have committed four times that, and 20 out of those plus 80 funds were committed with us too. So the result was quite, surprised if you ask me personally.
Mm-hmm.
But then, of course, it's like I'm saying, probably if you put the three of us together as a founders, they will say, hey, it's something it should be something there, right?
So you're saying that the secret there in the first place was the kind of experience that you were bringing with you as founders, as a
Definitely.
team.
Definitely. I mean, at the end of the day, it's, we ended up raising, this round, 4.3 million, basically the three of us and a PPT. So my conclusion was if you manage, the only way that you manage to do that is because you have the experience and you are tackling a
Mm-hmm.
problem in a business in where you have been struggling or suffering, a pain point for years. And that was our case, right? After each of us have been working for 15 years in the ecosystem, we knew that the problem was there, and we also realized that there was no one trying to tackle that opportunity in Latin America, at least in the way that we are doing it, right? So yeah.
How long does it took the entire process, raising the funds?
So I mean, for the entire round was almost 3 months from basically the moment that we start pitching until we close the final fund, if you will. So
Mm-hmm.
it was actually quite fast, if you ask me. I mean,
It
I was
was
expecting
very,
to
very
like,
fast. I mean,
yeah,
compared to the average, at least to the average in Europe, it's very, very fast.
yeah. And also one of the things that this is something that I'm sharing, just with you right away, just because the question was, quite on that piece. But we actually started working and hiring, the initial team
Hmm.
in August, um, using some funding that we managed to like raise with mostly angels. And so that gave you the possibility also to like demonstrate traction. I mean, even though I've just
Yeah.
mentioned that we raised with a PPT and the three of us, the reality is that when we were finishing the conversation with a couple of funds, we were already working on product, and we were already, proving that we were capable to bring the talent necessary to actually doing this
Hmm.
as fast as we are doing it, and as we sell it to the funds, right?
Oh, that's interesting. So you actually use the kind of hiring that you are doing as a proof as traction, let's say, and also about your knowledge and your skills. So we are actually able to attract talent and to build this company as we are pitching it. So yeah,
Exactly.
that's very interesting.
Hmm.
And
Yeah,
and, and
that's.
what about the construction of the product itself? So
Mhm.
you started like on parallel where you were fundraising, or right after? How did you actually started that?
Great question. So yeah, I mean, let's put it like a timeline. So we started the fundraising process by the end of May, basically in June,
Mhm.
right? Um, and so, I mean, in June, we start to build everything we needed in order to like go out and start pitching. Our pitches started more close to the end of June. During July, we started, most of the conversation with the funds. And as I was mentioning, in August, we started the hiring with the relevant guys that were actually the ones that start building the infrastructure. We are building everything from scratch, so we are doing everything cloud-based in AWS, and so we start to bring all the senior team that basically gave us speed. by the end of August, we already had, most of the infrastructure already in place in AWS. And so we
Wow.
start to like share, hey, you know what? Even though we are still, on fundraising mood and we are moving forward and we want to close this, we already start the product and we are moving even faster than we thought. One of the things also that we're kind of like, I don't know if different, but I mean different for sure, but strange, if you will, is
Mm-hmm.
that for a pre-seed company as we are, right? It was actually our first round. We had the data room and we did our work basically to like put everything together and say, hey, you know what? This is the scenarios, this is the money that we need, and this is the assumptions that we are considering. And this money is actually, we are not, you know, uh, trying to fundraise money just because, just because yes. But at the end of the day, it's all supported in a business case that comes from prior experience. So we ended up with a data room with more than 18 documents in where basically we supported all of them. Then again, it was a little bit different, right? Most of the funds said, hey, you know what? It is nice to see a data room as complete as you have it
Mm-hmm.
for a pre-seed, for a startup that is actually, doing their first round.
No, that's interesting. So you basically prepared as it was, a Series A or a Series B. So everything
Exactly.
professional. Yeah, that's a very good point.
Mhm.
Maybe one last question about the hiring, because I think that the hiring part is very, very interesting. Something not that common, to be honest. So, what are you currently looking at in a new hire? And are you still, accepting or confirming every, last interview? You want to meet every one of them? You are still in that kind of situation where you want to know every employees you have.
Awesome. Great question. So yeah, we also grow quite fast.
Hmm.
So, I mean, we are today a team of 23 people, if I'm not mistaken,
Hmm.
and we should be ending this year with a team of something close to 25, 26.
Hmm.
The reality is that we are not expecting to grow a lot after this initial team that we have, because we know that with these guys, with this team, we are capable to deploy and deliver everything that we have in plan for the next year. Um, However, to your question, I mean, one of the things that it's quite that creates or gives me peace of mind is that we are bringing senior people into the company. So
Hmm.
every single people that we are bringing, it's guys that have been working in payments or working in developing anything related with payments for the last 6 to 10 years. And I guess when you have this density of talent, one of the things that you can like immediately say, hey, is give them flexibility to like make them hiring, especially in technology. So 90% of these people that we have today is actually concentrated in tech, in the IT team. And our team has a quite strict test and process of hiring. But at the end of the
Hmm.
day, they are the ones, since they have the seniority and they have the connections. We managed to like bring a team that is actually deploying and developing, even faster than we expected. In my case, I always preferred, yes, to be involved in the hiring processes,
Hmm.
at least as part of the interviews, right? Primarily to like just confirm that culturally speaking, that people,
Hmm.
that person particularly, it's actually like a fit with the culture that we are willing to build. But more than that, technically speaking, it is more on
Yeah.
Rodri, if it's on the operational side, or with one on the technical side.
Yeah, no, I mean, from a technical perspective, totally agree. But the other topic that you made is a very good one. From a cultural fit, this is something that came out very, very frequently also in the last couple of interviews that I made.
Mhm.
So having the right person from a culture perspective is critically important. You need to have someone that fits in the company, that is along with everyone else, that has the right mindset, right fit, and everything else. Otherwise, there's going to be a problem later on, because you cannot, build something like a startup, with the fast moving environment and the ambition and everything else with someone that doesn't fit in that environment.
Absolutely, absolutely, and that actually becomes more important when you are 100% remote, as we are. And
Yeah.
so, culture in that pace is fundamental. So that's why we have this condition internally where every single of the founders has to like be involved in the process on the interviews, mostly to validate culture in in the roles in where basically are not tied directly to our own structure, if you will, right? So yeah, that's key. That's key. It gives you speed. I mean, if you have the talent but you don't have the culture, then probably you have the speed, but that's not necessarily like something that you can maintain in the near future. In terms of how it relates with the rest of the team. So for us, it's critical, to have that fit from the very first moment.
Yeah. Okay, Carlos, it was a pleasure to speak to you, and I'm looking forward to see the next steps of Aqua in that market because it's going to be very, very interesting. So, thank you for being here. You were a great, great guest.
Likewise, Michelle, thank you so much for having me. And yeah, hope we have the opportunity to talk soon about, more what is happening in the ecosystem.
Absolutely. It was a pleasure. Bye.
Take care. Bye bye.